What is doing well though is VIP Industries, both on the fundamental front and in terms of the reward that the shareholders are giving it. It's seen robust top-line growth aided by all 4 key brands in the first quarter earnings. With the upcoming holiday season, will the company maintain its sales levels, or will the depreciating rupee have some bearing on the company's financials? Let's ask Mr. Dilip Piramal. He's chairman at VIP Industries, joins us on the show again. Mr. Piramal, good having you. Thanks so much for joining in. Albeit we're talking a bit late, but congratulations on a very strong quarter. I'm not surprised really, but share us some details or some highlights as you got a chance to reflect upon the quarter gone by, and how does this augur for the quarters ahead?
Well, as I have said earlier, that we are doing well on all fronts. That all our brands are doing well, all our channels are doing well, our products are well accepted, and the Indian economy is doing well. So it's a combination of everything, and that is resulting in a very good performance. When the sales growth are more than 20-25%, the margins really shoot up, and we are getting the benefit of that.
You had mentioned in our previous interaction with me, and I'll cite some of these examples in this current interaction, Mr. Piramal. You had mentioned in a previous interaction that Q1 is usually the strongest quarter for you due to the wedding season. You've clocked in about a 30% sales growth. I'm guessing it would be difficult to reenact this kind of growth on each of the other quarters.
Let me correct you that Q1 is not on the wedding season alone. The main driver is the travel boom. It's the holiday season, it's the vacation season, because it's the longest summer vacations in all parts of the country, through April to June is the holiday season, and that is the biggest driver of our business. Wedding is the second. So it's not only that, it's not only wedding season, you are emphasizing the wrong thing. And to answer your other question is, that the growth is on the basis, like the first quarter is good in every year. So even in the last year, the first quarter is the biggest quarter. So the next quarter, the sales will be lower than the first quarter, but the growth rate might be the same. So, but also we have to remember that last year we had, especially in the month of June, we had the impact of the GST introduction. So June was a poor month. As also during July, August, September, there was a little bit of uncertainty, and we had 28% GST at that time, which was reduced to 18% only in November. So the first half saw a lot of uncertainty because of the GST introduction. So we had a slightly lower base, which probably is not there in the third and fourth quarters. But overall, all things considered, we have definitely gained from the unorganized sector. The entire industry, because all our other the two major competitors are also doing extremely well. So it is a good thing for the organized sector, and I think the momentum will continue.
Yeah, I also remember a line, maybe not verbatim, but you mentioning something to the tune of how the economic conditions in India have never been better for you in your memory at VIP Industries. I would reckon that the momentum continues into the quarters ahead.
Yes, of course. I mean, the economic conditions are not really restricted to one quarter. I mean, you see, India is on the growth path. In fact, I have been saying this since the 90s that if we follow good economic policies, we are still one of the poorest countries in the world, and we are in the bottom quartile of the world's population in terms of economic growth. So we have to go forward. If we follow good policies, there is no holding us back. And also we are aided by a strong economy in the world. So like we should be what we can. China is the best example for us. We have to follow China. And today China's per capita income is about 8 times that of India.
True.
So we have a lot of potential.
Okay, I want to talk about specific brands as well, Mr. Piramal, but just before that, if indeed the sales volumes, even on a quarter on or a YOY basis, will continue moving up, are we to assume that the new normal for the operational metrics would be higher than where it is right now? I mean, Q1 you've done phenomenally well on the operating profit margin front. What would be an average new normal for you as a company?
Again, it is very difficult to give a exact figure because see our overall EBITDA is only in the region of it varies between 12 to 18%, and so that is not very large. I mean, if we have something like 40% or even 30%, it would be more easy to predict this. But when your overall maximum margins are about 16-17%, then even 2 or 3% makes a big difference both ways. When your volumes go up, then they can increase also. So I think we should be in this similar margin band. We should continue.
Okay.
Because sales growth is very good. So once sales growth is good, we can take care of the other increasing costs, etc.
Interesting. In the opening remarks, you mentioned about how the sector at large is growing at the expense of the unorganized sector. But channel checks also seem to suggest that you are gaining market share from your competitors too, Samsonite as well as American Tourister. So how is the market share scenario shaping up? How different it is from what it was maybe 12 months or 18 months or 24 months ago?
Maybe we have gained a few percentage points, maybe 2 or 3 percentage points. But in fact, I think the maximum, our other competitor is also doing quite well. So it's not that we have taken too much from the unorganized sector. I also feel that the overall market size has increased. You see, what happens is when the economy grows, and with this sort of growth, a lot of consumers move from the unorganized sector to the organized sector, that is from unbranded to branded goods. But the overall market also increases, so the penetration increases. So even the unorganized sector must be doing quite well. And people who have so far not been consumers of luggage would be entering. And that is how the market sort of pans out. In a growing economy today, our penetration, I think, wouldn't be more than 25 to 30%. So that will increase, and the beginning is always in the unorganized sector. Whenever any product can be made both by the organized sector and the unorganized sector, this is the case. There are two separate market segments, two broad market segments, and one doesn't really impinge on the other, except at the very low price points. But I don't think, I think both the sectors are quite independent of each other.
Would the same be true for backpacks as well, Mr. Piramal, for the sector I'm asking? Because that is essentially a lower price point, but is the organized sector seeing robust growth there?
Yes. Yes, absolutely. I think, in fact, that is where we have probably gained the maximum, because you see, the smaller the item, the more it is amenable for the unorganized sector. But because our brands are so strong, particularly in backpacks, our Skybags brand is absolutely amazing. And our campaign with Varun Dhawan has really been doing extremely well for the last 3 years. And we continue to come out with very good products. So in fact, that is where one of the bigger drivers of our growth.
Interesting. My final question, Mr. Piramal, is on the currency, and how does this rupee depreciation impact you as a company?
See, we got to realize that the rupee depreciation is not so much a rupee depreciation as the strength of the dollar. And that strength is also reflected in, let's say, the Chinese yuan. So the Chinese currency also has depreciated. So to that extent, and when we buy from China, we try and take advantage of that you are also getting more money for the dollar. So we try and see, and because of our strength of buying, we are the second largest buyer in China of luggage. So, and we have been the only company which has been constantly increasing our volumes in the last 8-9 years. You should remember that when the consumer crisis took place in 2009, the Western economies were really doing badly. And for many years, they were not, there was a recession there. So we were the main buyers, and we are very, in fact, our sales, our purchases from China going up year by year. Our rate of growth is also very good. So we have a very strong commanding position as a buyer. So we are able to contain the costs better than our competition.